Jamie here. Hope everyone's doing outstanding. April 16th, 327. On this fine Wednesday afternoon, talk quick about the market. Something looking at go from there. S&P hitting lows right now, down 3.2%. The VIX is soaring up 16%, and just a rough day. Fed Chair Powell came on, and markets were weak already after the Nvidia news, ASML in the morning, and then AMD, and then not much in the way of headlines, positive ones, right? No positive trade deal developments, no exemptions, no rumors of a pause on order, like no, all those headlines, which maybe have maybe gave some hope that some of this tariff angst will wane, or tariff angst able to take some of that away. That didn't happen, and it just, just this is probably what the market's going to look like for the next week or two if this trend continues, right? So hopefully Japan and US can come out with some deal or headline. There could be some kind of exemption news or clarification on something, or something positive, or yeah, it's just not a good thing. So I posted it here. Fed Chair Powell was the big event today. 1:30 today, spoke at the Chicago Economic Club. I think that's what the name of it was. And it seemed like almost like the market was hoping for a dovish spin, that he was going to hint at rate cuts. And I don't think it could be any further from that. He's been, I mean, pretty steadfast in not in kind of wait and see approach, and that's where it is again today, and that's even in the face of all this uncertainty. So uh, uh, once he started spinning it hawkish, you kind of see the market selling off. And he had prepared remarks. I shared it here. Uh, he was talking about Ferris Bueller. He said, "Life moves fast. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy." So to me, today it sounds bad, right? This is a hawkish spin. Uh, if you want to see anything good for the market, you would say, hey, maybe the Fed's going to be open to cutting rates at the next meeting in 3 weeks from today. That certainly is not the case pending anything crazy, right? And then that would require maybe an emergency meeting. But so that was the bad thing. To me, the good thing is it keeps the Fed open to having tools at their disposal if the shit hits the fan. Pardon my French, but times like these, I give myself a little openness to use some language. But we'll have to see how this all plays out. I still am optimistic that the economy is going to not head into a recession. But again, the longer this goes, it's just almost like a foregone conclusion. You keep seeing headlines of some of these small businesses being impacted. You have that de minimis rule, I forget how it's pronounced, where all these products that were under a certain threshold, I think it's $800, were protected from tariffs. Now that's getting nixed, right? And you have the Temus of the world, and the Amazon hauls now. Those are all going to have to rework their how that all works. But I think a lot of folks are still thinking that there's going to be a last ditch save, right? There's going to be a stick save at the very end, right when the puck is crossing that line, and the U.S. is going to come in and work a deal out with China. I think that's what a lot of folks are hoping, including me. And it's almost like I expect it, and then the fact that it's not happening, it's just going to creates more concern. So that's kind of the overall rant. I mean, again, I made a little joke meme on Fed Chair Powell, that he's going to make himself homeless, but it's I anybody waiting for a dovish spin, it didn't happen, and now we're going to have to wait for earnings season commentary, and then Fed in 3 weeks. So in between that, the market's going to remain volatile. It's just uh, I hate to look at the chart and say, wow. I mean, if we consolidate a little more for another week or two, you can make the case for another bear flag, right? And we had that bear flag from 600 to 560, and then down to, I think it was 490. I forget. I have to go back and look at my bear flag that I paid. And now you have a potential setup. We have consolidation here. Now you have from 570 down to 490 or 480, whatever. So uh, just all these negative things start popping up, and it's just this environment. I try to be optimistic. I still don't have my bear suit on, but I'm open to playing positions for hedges, and that's the other part of it. It's tough. Some of these names are so sold off now that even if you want to try puts, then you have to do the almost like this company's going bankrupt kind of puts. And then I see some of these names, and they're still fundamentally sound, strong growth. So I know the market's a forward-looking mechanism, so that obviously it's pricing for for slower growth. But all right, so that's kind of the overall market rant. Just individual and the SPY. I was looking at that 537 as resistance. Ironically enough, there was a fat finger at about 215 or so, fat finger trade when the SPY was at 528. Someone or five, maybe it was 526. There was a fat finger for 537.89. So now the daily chart is ruined unless they remove that trade, which kind of stinks. Anybody, if you've traded over the years or what have you, and you have a fat finger trade on one of your charts, it screws everything up. It screws up all the math too. But watching on the SPY, 534, then 524. We were actually hanging at 524 for a bit on the SPY, and then it just broke through down here at 520. I'm hoping we get a late day surge, can close over 524, and then maybe have a decent close into the long holiday weekend. If not, I mean, pending any, the other part of it is you're hoping for some kind of headline. That's what this market's been doing recently with those. We had that 90-day pause headline out of nowhere. I say not out of nowhere for the market. I'm sure other folks knew that was coming that day, but rants for other days. All right, so that's kind of the overall market, just 524, and then you start looking at other areas here on the SPY. If we don't hold the 524, have 512, and then we start to go back down 492. So don't want to see that happen. I mean, you look at the VIX, and considering where we are now, the VIX was substantially higher when we were at the low 520s. So to see it down here at 30, it is up 13% today, but all things considered, not too bad. But it's almost like, is it because the fear is normalized now? Is the market being down 3%? We've normalized that trading activity. So, or have folks already positioned for the downside? So those are some factors there. So that's the VIX. And then, again, the yields, right? And so it always seems like the market switches the narrative to a different bear case. And, last week it was about the U.S. debt being replaced, but wasn't being a safe haven asset, and treasuries being sold off, yields are spiking. And today, sure enough, as we started to sell off, the yields went up, yields went down. So maybe we can start removing that as a possible fear mongering narrative for the next leg down. Who knows? Not going to remove it. All right, so just overall individual names. So first, as outlined on the watch list this morning, I was waiting for Johnson & Johnson to find some support. It gapped higher was 556, then reverse course in the morning. And then once it started to bounce, I was looking for some strikes into next week. Finally got those 560s. 160s, which were solidly green into most of the afternoon, even into Fed Chair Powell. And then they dipped into the red just about 20 minutes ago. I'll hold those into next week. I think there's going to be some names that might continue to do well. And you look at Johnson & Johnson's earnings, the commentary, their guidance. If there's any trade deals that happen, like Johnson & Johnson already pretty much said that tariffs are going to impact them, but they're all set. They raise their outlook despite that, knowing the possible impacts they'll have. And they said they're going to work with the administration with any issues there. So to me, if there are trade deals worked out, that you got to think that's like a double whammy for John. Not only were they able to possibly overcome the tariffs, but if those are removed, then they're going to have even a bigger benefit, their guidance will be even better. So I think it could do well, even if the market has some weakness here. And obviously if there's trade deals, I think it will overshoot. So that's kind of why I got those strikes. They were inexpensive too, trying to find decent premium trades. I'll continue to hold those into next week, pending anything crazy. And then the flip side here with Fed Chair Powell going, I finally pulled the trigger on SQQQ calls, only because it seems to be a good hedge for downside, right? And I was looking at them this morning, I was looking at them yesterday, and of course, when I got the strikes, I think it was $38 to SQQQ, and I got to 42 calls, and you look, they expire tomorrow. Oh, you crazy? It's got to go up more than 14, 15% just to get in the money. But number one, you don't need it to get in the money to make some good coin on the call, especially when you're doing out of the money strikes. And number two, it moves so darn quick when the market rolls over. So got some inexpensive calls. Within a little while, I was able to close some out for close to 100% to cover some costs. And then just earlier, just a little while ago, closed some more out for a little over 250%. I'm going to just hold the rest into next week. They're still at 50 cents here. Going to be 18. We could have a bounce tomorrow, and then I'm already riding free with some profits, so to be able to sleep easy at night, and then if we do have a big gap down open, I can close those out and get some calls for reversal. So I'll hold those, and SQQ continues to be a great hedge trade. Other names, Dell looked like it was getting going in the morning, almost into the green by 10:30, then 11, it almost hit 85, then boom, selling off with the rest of the market. I don't even know if I'm going to trade that just yet until things get settled. It's just tough. You look, Nvidia is down nearly 10% today, well, now it's down only 9%, almost broke $100. PLTR is down big. A lot of these names. And then you look at some of these, the Mega 7. I think Meta's down 7% this week. Google, Amazon, they're down all 3 days this week. So interesting stuff. Just other names too. GameStop. Not going to talk too much about GameStop, but back-to-back red sessions, hasn't done that since its earnings reversal. So hopefully that trend doesn't continue. And that's also in the face of Bitcoin, right? And if you look, and I keep talking the last couple of weeks, Bitcoin used to be this crazy volatile asset. I mean, if some people don't call it an asset because think digital currency is an asset, but it used to be very volatile. And I've been saying this for a while. And all of a sudden, the last couple of weeks, even with the market turmoil, Bitcoin's been holding up. I mean, it's sitting here at $84. It was green going into Fed Chair Powell, solidly green too, and that was with the SPY up down over 1%. So, just a good sign there. And then you got to think it's bullish for the GameStop and strategy. So, hopefully, GameStop finds some footing here. I'm still looking at those June strikes. Unfortunately, premiums were coming out of the May calls today. Thankfully, I got some of those out to cover costs, or most of the costs already. Yeah, those are down 25% just with the stock down 2.8%, which is surprising because it was up with the stock being flat the other day. So I'm still looking at the 50 strikes. Those have come down in premium. Those are down 10%. So maybe I'll look to get. I'm not going to add anything today. It just doesn't make sense. But at least it's like a win-win scenario. I wouldn't call it win-win because my May strike premiums are coming down, but at least the June's are becoming less expensive. So I'll probably tomorrow I'll nibble some into the weekend. There's the NVIDIA chart. Oh, that's just not a pretty chart. I'm just trying to think of so many things I was going to ramble on, but I totally forgot. First Solar. So another, First Solar looked like it was going to bounce this morning. Relative strength with the rest of the market. It was 125, then 126, got all the way up to 128.50 by about 9:50. I'm like, oh wow, now's the chance for me to go get those 145s for next week. I was 2 seconds away from pulling the trigger, and then it dips all the way down under 127. I'm still watching it, and then boom, it's down another 3% today. So some of the trades this week, thankfully, I mean, I haven't done many trades out compared to what I've been doing over the last couple of weeks, but it's almost a good thing because I'd be down in quite a lot of positions that I would have got some strikes on. Similar to Netflix this morning. I was like, oh, maybe 1050, maybe 1060 this week, and almost got some strikes at the open. It was 980 for most of the morning, and then boom, down to 950 just a little while ago. Just broke under 950 and bounced. I was at the 1050s. I think they were $7. Let's see what they are now. Boom, boom. Do I even have this up here? Yeah. So implied move on Netflix calls right now, $55 into tomorrow. So what was that? 6% into tomorrow? I mean, that's pretty volatile. And then you look, the 1050s are $1.84. They're down 76% today. So not the type of risk reward I like. I mean, pretty much $1,000 out of the money with the day left till expiration, but could be one of those where it gaps. If the market bounces tomorrow, there's some news or relief bounce, it's over $1,000, and those could be up big. But I'll wait till tomorrow. It doesn't make sense to put on extra risk. And that's it, folks. Let's have a great afternoon. I'll be back later. Rock and roll.